We'll talk about some like one. Okay, so we're going live now, by the way. Just give it 30 seconds, but we're on.
It's trending here.
Yeah, have a look around. All right, we're live.
Cool. How's everything going, guys?
What's going on? Here, let me
Get up PA.
having a bit of lag here. MacBook Air, man. I should have got the Pro.
Do you want me to share?
No, I'm sharing actually.
Okay.
Sweet. Interesting day today. We got a long weekend coming up, right? Markets are not going to be open on Friday. Inland, how's it going, man? Glad to see you back here. What are you looking at today? Austin, what's up? Let's see what's going on StockTwits. Let's see where the retail are flocking today.
It looks like UAL is pushing hard, man.
Oh, yeah? Oh, 17%?
Yeah, UAL is pushing really hard. I'm looking at vol right now. Wow. Skews and so intense.
Let me just close a couple things here. My computer is being slow. MacBook Air can't run 3 programs at once. It's on the verge of exploding. All right. Shall we take a look at UAL?
Yeah, before we do that, just do a little macro view here. See what's going on with the markets. Markets are, markets are pushing higher. 1.7% we're up. It just seems like this market cannot go down.
It's crazy, right? Like
crazy
unemployment.
Crazy.
Why do you think that is, man? Unemployment numbers came out. Unemployment numbers were 6 million compared to the estimate of 5 million, right? But that was a government estimate, right? So something that I'm thinking is, I wonder if we can find news that the market was anticipating it to be worse, right? Because what the Fed says and what the market reacts as are not always the same thing, right?
Mm-hmm.
Right? Like it's like that thing. It's like, it's like earnings releases. You know what I mean? It's like, it doesn't matter if it ends up, if they beat earnings, if the market thought they were going to beat earnings.
Right. Exactly.
Right. So I wonder if we can find some news about that.
Yeah, we could definitely look into it. I mean, it's just.
What should you look up to find that?
I'll take a look later, but here, I'll check out my screen.
Cool.
Yeah, let's see what we got here.
Look at this. VIX is down at 44, man. VIX is coming right back down.
It's coming right back down. It's unbelievable. And even S&P vol has come in quite a bit. It's pretty crazy.
Yeah. Do you think this is going to keep running for a bit? What do you think?
So I was looking at the unemployment numbers here. Yeah, I think honestly, dude, it's pretty unbelievable what's happening here. We're seeing, we're going back to all-time highs at 40% unemployment. I would definitely say, this thing is probably topping out here. I already have a little, but maybe I'm just talking my book. I have some long VIX exposure. So I mean, to be honest, it's really hard to tell directionally. But what is paying out is long gamma.
What's long gamma?
Long
just
gamma.
For the guys who may not know the Greeks well.
Yeah, buying short dated options. Okay, buying the straddles of short dated option. It's paying out tremendously right now. The moves have been pretty big, and the market's implying really small moves. So you can actually get in. Like we had a trade on in the group with Bank of America, and that's just paying out left like hand over fist right now.
Do people still have that trade on?
Yeah, Russ got out, and Enrique is still holding the position, and I'm still holding a little bit.
Really?
Yeah.
Enrique's still holding the full position?
He's still holding the full position. He's learning how to gamma scalp, and
man,
it's
Enrique's
paying out big
balls.
right now. Yeah, it's paying out big for sure.
Crazy.
But that's because the market implied volatility is so cheap. The market's saying the stock is not going to move, right? And you can take like just take a look at Bank of America. You know, our
Yeah,
implied
things
vol
are
is
cheap right now too.
so cheap. It's right 60%. Our forecast is 87.
What are you looking at? Bank of America?
Yeah, BAC.
Go to the vol trader. So guys, this page here gives us a look at volatility, which is how options are priced. It gives us an options overview of each stock that we look at. Right now we have 600 equities in here, and we're adding how many more, Jordan?
We're gonna add 1,000.
1,000 more.
Yeah.
And when are we doing that, this week?
Yeah, we're doing it this weekend for sure. We got a long weekend coming up. It's gonna be a nice Easter weekend. And
Lots of coding.
Lots of coding. Yeah, exactly. It's gonna be yeah. We're gonna add some cool features to the tool.
So guys, look at this. Sorry, Jordan.
Yeah.
BAC. This is crazy, man.
It's crazy.
59 IV, 86 RV, right? So what this number here is, guys, this is our forecast of volatility. So basically all these numbers here under vol forecast, we combine all of these, right? We use some math pretty much to rationalize all these numbers to create a forecast of volatility. And what we're trying to do here is basically using all the available information, create our own forecast of how much things should move in the future if we were to take out all the market bias. So if we were to take out like retail traders bidding up the price of options, if we were to take out, you know, like hedge funds buying up puts to hedge their positions, what should this thing actually move, right? What's the fair estimate of volatility for this asset? And what we do is we basically compare the two, and we use that as the basis for finding trade ideas, right? So if the market thinks something's going to move 60% and we think it's going to move 86%, what that would tell us is this is pretty cheap, right? Because the price of the options is correlated with the forecast of volatility. And we're basically saying the market is underestimating how much it's going to move, which means they're understating how much those options are worth. So we can buy them for cheap. Right? If it was the other way around, they'd be expensive and we'd be looking at taking a sell side position. Yeah, this is sweet. And look, the options are still pretty cheap for it. This is cool. And look at this, guys. Let's take a look at how this has changed recently here, because it wasn't always like this, right? RV in the last 2 weeks popped above the IV. It really, and look at that spread. Look at that spread there.
Yeah, it's huge.
We haven't seen that spread for this company in like a year. Look at this, right? This is how IV and RV have moved together over the last year. Then look at this. Just now, boom.
Yeah. So you want to be
we can
buying
capture this spread.
Yeah. And you basically want to be buying the blue line and selling the purple line and hoping for some type of convergence.
Yeah, exactly, right? Because if you look over the past, right? Look at all this. They move together. They cross over each other all the time, right? This is how implied it, because think about it. The market starts implying a lot of volatility. Usually volatility starts to they meet back up, right? Volatility, as they separate, they come back. It's mean reverting.
Yeah.
So we can expect this gap to close down here.
Mm-hmm.
And we can capture that spread. And what we're doing here is we're going to be on the buy side because it's so cheap right now. The realized volatility is higher than the implied. So we're going to be looking at trying to capture that spread. Yeah.
And it's a cheap bet. It's a super cheap bet. There's not a lot of, if things go wrong, you're not going to lose a lot of money.
Yeah, I think our buddy Ashton's cashing out on that right now.
On BAC? Yeah, I think he cashed out.
I think that's the one he's making bank.
Yeah, he cashed out pretty big on BAC. He took the
good for him.
He had the calls. He wrote it up. Yeah, he had some fun.
I'm sure the heart was racing this morning. Mm-hmm. So there's two ways we like to find opportunities, right? Like two entry-level ways to find opportunities as you're getting into options trading and vol trading. One way is we use the tool, and we can basically use the tool to do a comparison of these two. So we do IV versus vol forecast, right? It's this tab right here. So this entire top section is a scanner, right? If we go through the pages here, we have all the equities listed here, and we can sort them based on different factors, right? We want to sort them based on price, right? This is the cheapest one we have in here. And we got Amazon as the most expensive one in here. But something we like to sort by is the IV versus forecast. And what this does is it divides the implied volatility by the realized volatility and tells us which one have the biggest spreads. If you want to see the ones with the biggest spread of IV, like the highest IV compared to RV, you look for the ones with the highest number. So you do this, right? Right now it's this bond ETF, which we don't really trade. And if you wanted to see the ones that are good for buying, you'd flip it around again and you'd take a look at this. So like it looks like AIG is still at the top, right? If we go to AIG, huge spread.
Yeah, a huge spread.
Unbelievable. Like look at that. That's unbelievable.
Yeah, and you know what's amazing too is it's been realizing a lot of volatility still. You know,
that's crazy.
And guys, keep in mind the reason why we had that scanner there is because it's so we trade over, you know, let's say 1,000 equities, and it's hard to narrow down. Okay, what equities do I want to look at today, right? And not just 1,000 equities. Think about how many options there are. Right? There's thousands of equities, you know, thousands of options per equity. So as a human being to be able to filter through all of that, it's impossible. And so that's why we like to do this. Well, that's actually why we need this, is a nice scanner. Yeah, just think about
Right had earnings this morning.
AIG has moved down 22% and up 30% over the last 2 weeks.
That's insane.
Right? So insane volatility. It's had some huge swings, and the market's not implying it. The market's saying it's just going to be 78%.
Jordan, look at this skew.
I know. See, so okay, so some smart guy is buying out the wings. He's saying like, okay, there's going to be an explosion either up or down. What?
You're saying this is going to keep moving like crazy. I don't know what direction because it's so volatile.
Exactly.
But I know it's moving.
Exactly. So we can come here and buy the at the money straddle and capture some nice gains.
Look at that. The wings are so much more expensive. It's insane.
It's insane. It's insane. And so we can buy at the money straddle for cheap.
Guys, this market, I love it. I love how volatile this is right now. You know, I don't like how it's driven by this unfortunate, you know, pandemic, but this market is ripe. This is ripe for the taking.
Yeah.
Like, so guys, for those of you that don't know what skew is, skew basically helps us see the demand for puts and calls in the market. Where are people willing to overpay for options and where are options cheap right now? Right. So on the left side, we have calls and on the right side, we have puts. And depending on how this graph looks, it gives us different insights into the market. So for example, if we saw like this upside and this bottom side was down, you know, I'd probably move right over to stock twits and see what the retail are saying, right? Because, you know, retail tends to buy upside, right? They tend to be, you know, long on the calls. And it would, you know, I bet we'd see something there. But when we see something like this, what does this tell you, Jordan?
It tells you that the market's saying, okay, there's probably some guys in here who know that this thing's going to be moving around. And so they're buying up the calls and the puts.
Cool. So let's go back over to, so the first way that we like to look for stocks is by using the scanner, right?
Yeah.
But you know, something that we personally like to do is we like to look at where the retail money's at, right? So retail money tends to be wrong on often, most times, and you know, they tend to be riding the news and stuff. And there's an opportunity there because what happens is when you have a lot of retail money pouring into the option space, remember, options aren't like stocks where, you know, they need a huge amount of capital to move the market a bit. In a lot of options, you know, the retail money is enough to move it. So when we see huge retail volume going into a particular space, we really want to take a look at that because they might be pushed. They're often not able to price the options. So if they want to take a bet on something going up, they'll just buy the calls, even if they're expensive, right? And if we know they're expensive, we can make money selling those calls, right? And, you know, we really go into why that is the case in our group. But to sum it up, basically, if calls are expensive, it means that the premium that they pay to buy the call is probably going to be higher than how much they make from the stock actually moving. So they'll pay $10 for the premium for a $100 stock, and then the stock will actually only move 5%. So they'll spend $10, make $5, and we get to keep that extra $5 of premium that was never realized in the stock. Mm-hmm. So we look for opportunities like that all the time. So let's go over to stock twits here and see what the hell's going on. Where's the retail money at? Anything catching your eye, Jordan?
Yeah. So the only thing that really caught my eye was
APA?
I actually did not look at that. I saw that quickly, but I did not look at that.
Do we have APA in here yet? Yeah, we do. Let's have a look.
Yeah. What was it?
Okay. What are they all in there for? Let's have a look.
I was looking at UAL, just up so much. Not a lot of message
Good.
volume though. Like it's not up a lot in terms of message volume, but sentiment's up 5%.
Oh yeah?
Yeah, people are
They're
they're
becoming
loving
more
this.
bullish.
They're bullish for sure.
Look at this. APA 93% bullish.
Really? How's the skew looking on that thing?
Dude,
How many people are watching?
it's actually
this
not
though?
as insane.
Oh wow, but look, there's still call skew.
6,000.
I would fade that so hard.
Yeah?
Yeah. Wow. What's the company again?
APA, Apache.
Oh, I think this is the one Neil was looking at.
Oh, you think so? What's up, Johnny? How you doing, man?
Yeah, I think Neil was looking at this actually. Let me message him.
Man,
the call
yeah,
sides
you
are
fade this for sure.
Yeah, the calls are pretty expensive here, man.
Trading at 200 vol. Yeah, okay, yeah, that's pretty pricey. Trading it higher than the realized. Wow.
Bidding on the upside.
So what would be the trade here, dude?
Okay, so first off, this company's really small in terms of
Price.
So what I would do though is
A lot of people would trade this. This is $9, right? It's a little small for us because we have some size we're packing on, but for someone with a bit of a smaller account, it's definitely tradable.
So I think this is a coronavirus. I think this is like a biotech, right? I'm pretty sure.
Let me look it up. Oil and gas exploration company.
Oh wow. Okay, so
operations in US, Egypt, and UK.
Okay, and it looks like it's the options that are. It looks like it is the retail bidding up the calls here. So I'd probably be looking to sell it.
So yeah, look at this. They announced a significant oil discovery.
Yeah, so news is already out about that.
April 2nd. That news is already out. What to analyze about the Apache Corporation?
Yeah.
Right. I think a big issue in the retail space, man, I'm just realizing it. They're taking fundamental data about what a company is going to do over the next 5 years and using it to place short-term bets, not realizing that any news that's out right now that everyone's already aware of is already baked into the price.
Already baked in, yeah.
Right. If they were buying 2-year calls, it maybe be a little different. But if they're buying short-dated options and they're trying to trade on news that everyone already knows, where's the edge?
Yeah, for sure. For sure, dude.
Look at this, man. It's up. Let's look at this. Let's look at the chart for Apache. Dude, I'm pretty sure this chart is going to look absolutely insane, man. 5-day chart is probably going to be like 50% or something crazy. Look at this.
Yeah, people.
5 days doubled in price.
Doubled in price.
This week, it's that's crazy. People are betting this thing's still going up to the moon. Right? At 200 vol, what are they betting on at 200 vol? Let's see here. I do with my calculator quick. They're betting on this thing moving 12.5% a day for the next month.
That's pretty crazy. It's pretty crazy, and a lot of it's to the upside. They're really betting it on to the upside here.
I know.
So what you could do actually is sell the 12 calls. Buy the 22. Sell the 22 vertical spread, and buy some shares against it, and that does not look like a bad idea.
So Inland's asking, what do you mean by fading? We literally mean just take the opposite. Take the opposite bet of these guys, right?
So,
they're buying options. Let's sell them.
Let's sell them. Yeah, they're specifically buying the calls. They're buying the calls. Let's sell those calls and maybe hedge it out with some shares. Hedge out our delta risk with some shares.
Yeah. you know, that what Jordan's talking about there with hedging out the risk, you know, that's like level 2 with options. But you could also just start. Would you sell any iron condors around here, Jordan?
I wouldn't sell any iron condors just because like
The
vol looks pretty,
put so high.
yeah, because vol our forecast is still higher than our implied vol, right? So it's still pricey to sell vol. But upside vol looks pretty pricey. So you could do something like buying at the money, right? So you could, so stock trading at 971. You could buy, for example, a $9 call and sell sell 2 of the $12 calls for April 17, for example.
Makes sense. Inland's asking, you know, why not puts? Like, why not buy puts instead? And if you want to fade them, why not buy puts?
Yeah, vol is just expensive. It's pretty pricey.
Yeah. So there's 2 things there, Inland. One, it's expensive. Look at the price of these puts, right? The puts are getting pricey as you go out with time, right? So on this side, it's the implied. So if we look at the chart, this side has implied volatility, and down here is what option it is, right? And look at this. As we go out on the term structure, if we buy longer dated options, it takes a while for vol to actually come down. But the other reason is that we're not saying it's going to go down. It might stay flat. It might go up a bit. But what we're saying is it's not going to go up as much as these people think it is. These people think it's going to go to the moon still. It's doubled in price in the last few days. The news is all out. What's the catalyst that's going to keep pushing this thing up, right? When we know that it's a bunch of retail going in, what we want to do is basically sell them it because they're willing, you know, like these options might be trading at like, you want to price them out quick, Jordan?
I'm sure.
Right?
Yeah, I actually think it's open right here, and it's the 1 week calls are going.
What are the Delta 5s trading at?
The Delta 5 calls? Well, we'll probably with the Delta 25s. The Delta 25s are going for 50 cents for next week for the 13 strike. So that's pretty pricey, man. You know, it's trading at 230 vol.
Is it trading at 230 right now?
Well, this is for the 30-day strikes.
Okay.
But for the 8-day, it's trading at 230. It's pretty pricey.
Yeah, compared to our forecast, it's serious.
Yeah.
And our forecast is already saying it's going to be higher, and they're saying it's going to be even higher than our forecast. So what we do is, we're basically going to say like, okay, we don't necessarily think it's going to go down, right? What we're trading is volatility. So we're trading not what direction it's going to go, but how much it's going to move. And what we're saying is these guys going to think it's going to move a lot more than it's actually going to. So we'll sell them really expensive calls, collect an overvalued premium. So something that should be worth $5, they're willing to pay us $10 for it. So we're going to sell them it. And then we're going to basically get to keep that premium because it's not going to move as much. That's the bet we're taking.
It's funny. Remember yesterday, IQ, people were saying like this, like, so if you go to IQ, Sean, on Stock Twitch, you'll see how the sentiment was really bearish. It was like it was under 40%. It was like 37% yesterday.
How did we do on that trade? We did all right?
Yeah, we did okay. I actually pulled out for a small loss, but the guys got out for a nice gain.
Yeah, because it came back down, right? It went up for a bit right at the morning, or
no, they got out right in the morning. I held a little bit longer. But if we look at IQ, like 37% of people were bullish, so 63% were bearish yesterday. And they were saying that these guys are cooking the books, and it just goes to show you how the stock's up huge today, 5%, and it just goes to show you, a lot of the times retail traders in a mass, retail traders as a mass are usually really wrong, right? They're usually they're usually on the total opposite of where they should be.
Think about the power here. We can literally, like, StockTwits has been such a blessing for people who know what to look at. Like, we can literally see in one graph what the retail mob mentality is thinking.
Yeah.
And then we can go to our tool and we can go, okay, what should this actually be?
And not even that.
And we can go, okay, cool. There's a difference here.
Yeah. And we even to add further onto how powerful it can be to combine StockTwits with our tool is that it also tells us what retail is doing.
Mm-hmm.
you
Where
know,
to look?
where to look? Where are they right now? Where can we put ourselves in a position where on the other side of our trade is a bunch of retail traders? Right?
Right?
Where can we
Think
do
about
that?
this, right? Markets are a zero-sum game, right? So every dollar you make, somebody loses a dollar. You buy an option, somebody sells you an option and has the exact opposite view of you. So whenever you're getting into a position, a question to ask yourself is, who's on the other side of my trade? Right? Somebody's selling this to me. Why are they selling it to me? Right? Is it a fund on the other side? Is it a market maker? Is it a retail trader? Or is it someone who's more sophisticated than me? Is it someone who might have better models than me? Someone who might have insider information, right? We want to do our best. We can't always get it perfect, but we want to do our best to narrow down the range of who it is, right? And when we see something like 98% bullish on a stock, and then we go and we see that the calls are skewed to the upside, that helps us narrow it down and go, okay, there's probably a good chance it's a retail trader on the other side, right? And then we go, okay, what are the odds that the retail trader has more information than us and has a more well rationalized view on the market than us, right? And 9 times out of 10 in that situation, we were able to place a pretty confident bet.
Love it. Man, I shouldn't. My RCL position, man, I had at 22. It's now trading at
What's it at right
43.
now?
43.
Are you serious?
Yeah.
Yeah, but the high tide raises all ships, right? Especially the cruise ships.
Especially the cruise ships.
The
That was
big boy ships
that was a
get a big bump too.
wild ride.
Man, how's our oil play doing? XLE.
It's up. We're good. We're crushing.
Oh, sweet. Another 5%. Another big day.
Another big day. That's the only thing we're
Gotta love it.
yeah. That and BBYs are the only long-term play I'm holding right now, which is BBYs up like 7% today too. So it's nice.
Man, I should have got into that one, man.
Yeah. But dude, I have some short deltas in the portfolio as well, just because
Getting smacked, eh?
I really can't see this thing. Yeah, I can see this thing snapping back pretty quick. But I have a little bit of long delta, a little bit of short delta. I'm feeling
You're
good.
hedged pretty
Portfolio's
well.
feeling healthy.
Are you long biased?
I am okay. I'm long gamma, so I'm just long big movements.
Okay,
Long
nice.
big movements, and directionally, I'm neutral.
Oh,
Yeah.
okay, cool.
Just have some hedges in place for my long delta.
You guys got any questions for us? That's our analysis for this morning, right? We're not going to be holding any positions over the weekend personally, right? We got the long weekend coming up in terms of like option plays, but there's a couple things that you could maybe look at today, right? There's a few big moves happening that we went over. But yeah, we're not going to be doing one of these for the weekend. We might do an Instagram live. If you guys aren't following our Instagram, go check it out. It's same handle, Predicting Alpha. I think most of you guys are coming in from Instagram though. Yeah, if you got any questions or you want any stocks you want us to look at, we'll analyze them now, and we'll make a move from there. All right.
Cool. We'll close it out.
It has a 20-second delay, so we'll give them a minute here. Yeah. I think we should start playing some music in the background during these lives. Get some nice beats going, some saxophone.
Yeah, we could definitely do that.
Okay, I think we're looking good here. We'll give it 20 more seconds, just see. But I think we're looking good. So Inland is asking, what do you think about GLD? Do we have GLD in our tool?
Yeah, we do. It's gold.
So what are your thoughts on this, Jordan? Well, look at
Yes.
this. Huge upside skew.
Well, yeah, it's gold is usually has upside skew. So
But to this degree,
yeah, the volatility is usually to the upside in gold, just like it's like to the downside in equities.
mhm.
In our opinion, I would say, well, we haven't done a lot of research. Gold is a macro. It's very macro. You got to put in some good research there. There's a lot of guys playing in this field. It might be a little tough to beat them. In terms of volatility, it looks fairly priced. So I have zero opinion on gold. If I wanted to spend a lot of research to learn how to trade it, I would. But gold is a very specialized product, right? So you really have to know the ins and outs of gold. Like back in the day when they had the pits, they would have the gold pit, they had the crude oil pits, and like these guys were like specialized in these products. So keep in mind those are the guys you're playing against. I would say you definitely need to do some digging into gold if you're going to be trading it. WDC. Oh yeah, did WDC? Oh no. Never mind. I thought WDC had earnings yesterday, but that was WDFC. I'm pretty sure.
They have earnings coming up? No, May. Right. So guys, cool thing, by the way, in the earnings section, right, we have the earnings date here. When the earnings date becomes confirmed, this will go green.
Yeah.
And then we had a question from Jonathan. Jonathan was just mentioning that he's holding on to SPY 330 calls at 619. He's up $112.
Amazing.
But he thinks that SPY is going to get closer. So you're bullish. Johnny's bullish.
Johnny's bullish. Good luck, man.
Good luck.
So it's always a sweat. It's always a sweat holding those calls or holding those puts. You're always thinking, am I going to be able to have dinner tonight?
Yeah, or am I going to be at the soup kitchen?
Yeah.
I might be heading back to the soup kitchen, boys. Until next paycheck. I'm just messing. All right. So yeah, we're gonna wrap it up there, guys. Hey, Inland, go to our Instagram and click in our bio. We have our Discord in there, and the public chat is open to anyone. So if you have any questions throughout, feel free to join there, and you can shoot us some questions. We'll be happy to get back to you. We'll look at some stuff. But yeah, for now, guys, glad everyone came in. I'm glad we got a bunch of questions today. We'll be back at it on Monday. Or wait, Jordan,
hold on 1 second, Sean. I see Neil asked a question there about the VIX.
Oh, did he?
Yeah.
Oh, I literally have it highlighted.
Is that our buddy Neil?
Yeah, that's Neil.
Oh, but it looks like everyone fell off. Is there C0 watching there?
I think it's been saying that the whole time, to be honest.
Okay.
I think my computer is struggling right now, so
I'll shoot Neil a DM.
Okay, yeah. I'll copy and paste what he said into the into the Zoom.
Perfect.
All right, guys, we're gonna wrap it up there. Take it easy, everyone.